Okay, so people. Um, some investors consider this to be the most important factor for a company. Um, I think that is true for a late stage development company who's going to try to, build a mine and, put it in production. It's also very important for, say, small mid-tier producers that are trying to grow, because growth is very difficult to do, and hitting your numbers, it's like it's just tough. It's a tough business. So anywhere, any development company or small mid-tier company, management is just crucial for those companies to be highly successful. The other end of the spectrum is your exploration companies. I mean, the geologist can be more important than the CEO. Now, the CEOs, they can be perpetual money printers. So they can issue shares and just keep raising money. A lot of these companies will issue shares every year, and some of them do it 2 and 3 times, these exploration companies. So they basically dilute into the ground. They're just trying to find gold so they can sell it and then they can get paid, and they're not really shareholder friendly. So you have to watch for companies that are doing a lot of dilution. But other than that, dilution's key. But um, the geologist and the property can be kind of more important than the management team per se on the low end. But then again on the high end, once you get a company with, say, a mid-tier producer with a market cap of, say, over $500 million, and the higher you go, 1 billion, 2 billion, the management teams tend to be pretty good. You will run into a few of them that are kind of perpetual. They're not um, as shareholder friendly as some of the others, and you'll come to learn this. For instance, like Hecla Mining and Core Mining, I always call them like twins. They tend to be perpetual borrowers, perpetual growers. They buy a lot of projects. They put a lot of debt on their balance sheet, and it never kind of catches up where the shareholders win, if you will. The only time those companies tend to do really well is during bull markets, but during bear markets, not so well. um, but you know they have good management teams, but it's their strategies. Their strategies are not conducive, if you will, for during bear markets, or non-bull markets, if you will, to do extremely well. So you have to look out for those kind of manager teams. You really want to find manager teams like, First Majestic, who kind of go out of their way to tell you that they're focused. They're focused on the shareholder, and that they're cash focused. Okay, so have they done it before? And this is really about development companies. What is their record? I've seen it time and time again where you have like an accountant be the CEO, and it's like, what? Wait a minute. How is a CEO that is an accountant going to build a mine? This is a tough business. You really want somebody who's built a mine before. If it's their first mine, you better cross your fingers. Basically, it's not an easy business. So they need a track record. Um, you want to beware of CEOs and chairmen of the board with no record. I just mentioned that. The guys at the very top need to have a bit of a track record. Uh, um, I mentioned this before, exploration and development. I didn't say development stocks, but I will mention that now. But exploration companies tend to be money printers, because, well, that they really don't have any choice. But they can be more aggressive or less aggressive on their exploration. And if they're very aggressive, they can just dilute significantly. Development stocks are always, and I'm going to talk about them separately, the development companies, but they can be diluters as well. And even producers, you don't want to see producers doing dilution. They don't necessarily have to, but sometimes they do, just basically to protect themselves. I mean, because they can put 20 million in the bank. It's just, kind of protection. Okay, to try to determine if they are shareholder focused. One way you can do that is to see how much shares they have, how much skin in the game they have. And then the other way you can find out is to watch the CEO and see what he says, and see if he basically kind of brags about being shareholder friendly. And very few of them do, you'll find out. And then, you just get a feel for, what are they out for themselves or are they out for shareholders? I just listened to, just today, I listened to a YouTube video and I couldn't believe the CEO. I mean, you could just tell everything that he was saying, that the focus was on him making money. It was amazing. I don't even think he realized what he was saying. Um, how have they been executing the last 2 years? Yeah, you want to check their news releases. How are they executing? And this is something you will learn over time. You will learn by looking at the news releases to get a feel for their execution. Um, what is the quality of their presentation? That's important. Is it up to date? Sometimes I like it when they're up to date. I mean, every month, the good companies, the ones that really do a good job, they update their presentations monthly, and they give guidance. And other companies, you know, I mean, I've seen a lot of late stage companies just give pathetic guidance, and and it's like, and it drives me nuts. When and then the really good development companies, fantastic guidance. So that's important. Good management team should stick out. I mentioned watching the CEO in a video and see what he plans to do. Like I said, I was watching that video today of that CEO. Um, I do own shares, but I doubt that I'm going to do is 100% return on that one. That's the way I feel about it. I probably should sell, but I'm hard-headed when it comes to that.